everybody. Okay, so what I want to do is I want to hop in and answer some of your questions that you all submitted. And I also want to let everybody know that in addition to everything you get from the Prime program, you can also text the word stock to 31996 and I'll send you profit alerts. Whenever I see something going on once a week, I'll send you something involving stocks that you can invest in. And also, do not forget that if you go to drboyceprime.com, you can also find out everything that's in the program as well. So I want to remind you guys of that. And don't forget also that our support team is always here to help you if you have any questions or anything comes up. And their email address is support@theblackbusinessschool.com. Support@theblackbusinessschool.com. Okay, so let me hop into your questions that you guys submitted. I'm going to fly through. I'm just going to walk right through them. And then also we have class on Thursday. So don't forget that on the text list, I sent you guys a link to the class. So you can just log in either at drboyceprime.com or at theblackbusinessschool.com. And it will allow you to then go ahead and get what you're looking for. Okay, guys. So, all right. So let me hop in and answer some questions. Okay. So Evian says, how do you feel about OTC ADR stocks like the one below, for example? How accurate are the stock analyst price predictions on Barron's? Okay, so this stock, ESAIY, I looked it up, and let me just tell you, the price is like 1918, and I saw a price target of $98,000 on the stock. It sounds nice, but it's probably not real, so I would be extremely careful about going ahead and believing that. I think that might be a lot, but the company's not a tiny sort of off the wall company. It's actually a $19 billion company. So it's very liquid and very big. So I'm kind of surprised by, by the fact that the number was so way off. I would look at other sources, maybe check Robinhood and some other places, and you can find some other things in there as well. Donald Davidson says, what if you've been selling covered call options on the stock and the price declines by 70%? You purchase put options on the insurance at the beginning, but it only covers 40% of the value. You are ready to move on from the stock. How would you make back the 30% equity you lost? Sometimes you can, sometimes you can't, and that's the nature of investing. A lot of people think that investing means you're always making money all the time. And that's not true. It just means you're putting yourself in a position where you have the opportunity to make money. You see, because if you don't invest, then you just stay broke. That you have no opportunity to make anything. You just sort of stay exactly where you are. But if you do invest, at least you're giving yourself a chance for the upside, right? And so, for example, this year when you saw stocks like NVIDIA double and triple in a very short period of time, you have to be positioned to be able to benefit from the opportunity. And so you think about it, if you took, a couple extra $1,000 and put it in NVIDIA, and the money doubles or triples, then you make, $3,000, $4,000, $5,000. But if you take that same money and spend it at the mall, well, then mall money doesn't double, triple. Mall money disappears, right? So ultimately, sometimes you do lose the equity. Now, if you really are concerned about losing your equity when you're selling your calls, you could just buy more puts, maybe buy a little bit more. We talked about deltas in class, but we could talk about deltas again. Deltas will allow you to determine how many put options you might need to fully insure your position. But put options generally protect you from that downside. Now, let's see. What about Bitcoin? Bitcoin is, I think Bitcoin's a great investment. I did a funny little skit on my YouTube channel, drboycetv.com, where I pretended to be Boyce from the future. And the reason I did that was because I thought about it. It was funny. I was trying to be silly. I was having fun. But really, it was like to say that if you could talk to your future self would tell you to invest. Your future self would probably tell you to do a lot of stuff that maybe you're not doing right now. Your future self would probably say, eat better so you can lose weight. Your future self would say, save your money so that I'm not broke. Your future self would say, be nice to your wife or your best friend because you're going to miss them later on. Your future self would say, make sure you spend time with your kids, right? So I always imagine that. I say, what if you could talk to your future self? And so my future self tells me to buy Bitcoin. And because why? Well, why is that? Well, because if I live in 2023 and I could go back to 2018 and I am my future self, right? Compared to the 2018 Boyce, he was just like me. He was a little bit fatter than me, but he was very similar to me. And so given that I am my future self, and if I could go back and talk to the 2018 Boyce, I would tell him, buy as much Bitcoin as you possibly can. Why is that? Well, because Bitcoin has tripled in value in the last 5 years. It's tripled. So if I could go back in time, get a time machine, and tell Boyce, look, just take all your money, put it in Bitcoin. Don't worry about all the other stuff. Stop getting distracted. Invest in Bitcoin. That's going to be your big win. Then guess what? There will be a lot of money that past Boyce would position future Boyce to be able to make. Okay, so that's just a way to kind of think about investing, is to think about your future self, and I do believe Bitcoin is going to. I would be shocked if Bitcoin isn't 2-3 times its value in 5 years. I'd be shocked if that doesn't happen. There's no guarantees, but I think if you're talking about good investments, I think that would be something worth looking into. All right, so Kevin says, I'm a prime student for an upcoming session. Can you provide a detailed explanation of buying leap calls? Please explain the advantages and disadvantages, deep in the money versus at the money, time to hold 1 or 3 years, etc. Yeah, you know what? We did something on leaps. If you log in at theblackbusinessschool.com and go into Prime Plus Lectures, go to theblackbusinessschool.com, log in, and go to Prime Plus Lectures. I did do some stuff on leaps, long-term equity anticipation options. Basically, they're just long-term call options. And leaps, the thing about leaps is that people tend to buy them if you think that a stock is going to go up and you're bullish on it, but you don't know when. That's the hard part. And so what happens is you have to buy time. So remember, I was telling you guys that the most important variable in investing, the most important component of wealth is actually time. So time literally is money. So to get more time on your option, you have to pay extra money for that. And so by doing that long-term play, what you're doing is just giving yourself time to make money. And the thing is that's a pretty straightforward way to make money without having to put up a ton of capital. For example, I talked to you guys in class about a position I took on Chipotle. I knew Chipotle was coming back. It was just a matter of time. So what I did was I bought some leaps on Chipotle. I actually did some vertical call spreads on Chipotle. I wish I'd invested more money. I made maybe I made $20,000. I don't know what it was. But if I had done it the way I really wanted to do it, it could have easily been $100,000 because I just knew Chipotle was such a strong company that their stock price could not stay down for long. I just did not know when it was going to come back up. Same thing happened with Amazon, even Coinbase. I mean, just all these companies, and sometimes the only time I get frustrated, if you want to know, every investor gets frustrated. I get frustrated because I wish I'd listened to myself a little more and thought about it a little more. I think I just bought it real quick and kept going. If I thought about it a little more, I would have actually invested, maybe like a lot more money, maybe 3 times more money in that, because I think that was a good move. But anyway, so leaps, they also allow you to do what we showed in class, which is the stock replication strategy. So if you log in at drboyceprime.com, you will see that we have a video where I did a stock replication strategy where you can buy access to the stock without actually having to own the stock. So feel free to log in at drboyceprime.com to just see everything that you guys have in your program. There's a ton of stuff in your curriculum. Also, we're going to meet for class this week. Rose Lewis. How do you close a vertical debit spread on Robinhood? That's a good question. Basically, when you close a vertical spread, remember, to do a vertical, you're buying a call and selling a call. So every buy has to be reversed by a sell. Every sell has to be reversed by a buy. So effectively, all you have to do is go in, and you can either do it at the same time where you're buying one back and you're selling one back, kind of neutralizing the sell with a buy, or you can do them individually. You can go and buy back. You have to buy back first. You can't sell first. You buy back the one that you sold, and then you sell the one that you bought. But you have to have a little extra cash available in order to do that. But that's how you get out of the vertical call spread. Just remember that every sell has to be reversed by a buy. So if you sold something, you got to go buy it back if you want to get out of the position. If you bought something, you got to go sell it to get out of the position. Mark Irving says, what do you think of Splunk, SPLK, for selling covered calls, as well as Palo Alto Networks? Yeah, okay, so I looked up both of those companies, and let me just tell you, I like Palo Alto Networks as an investment. I think that Palo Alto Networks is a good long-term investment. I would buy that. In fact, I think I have that in my portfolio. I do not see that as a great way to generate income. If you log in at drboyceprime.com, I have the Dr. Boyce Moneymakers. The Dr. Boyce Moneymakers are the stocks that I selected specifically that will generate the most income for you. So look at those if you're talking about generating income. But and it's not investment advice, but it's what I'm doing in my own portfolio. This is how I make my money. So that's the benefit of being in the class, is I tell you guys exactly what I'm doing to make money. It doesn't always work, but I do have a PhD in this stuff, so I know what I'm talking about. And so ultimately, there are stocks that I pick to make money from, and then there are stocks that I pick as long-term investments. So it's like a football team. On a football team, there are some players you recruit so they can be wide receivers, and then there are some players you recruit so they can be linebackers or linemen, right? And the way you recruit a lineman means you might look for a guy who's big and fat and bulky and strong, but you look for a wide receiver, you need somebody who's tall and slim and fast and quick, right? So ultimately, remember that when you're picking stocks for different portfolios, you have to think about what the objective is and then position the assets based on what it is that you're seeking to do. All right. Next, Jerry, what are your thoughts on Webull? I think Webull works well. I don't use Webull because I already use so many other different platforms to invest with, but I like Webull. I've heard nothing terrible about Webull. I respect the company a lot. Let's see here. Errol says, once you introduce the new list of moneymaker stocks, what's the role of the former moneymakers that are not on the list? Are you still trading options on them? Do you sell your positions? If you sell your positions, what do you do with your puts for those sold positions? Okay, so when I get out of a position, I sell the stock and I sell the puts, right? So because there's no reason to hold the puts if you don't hold the stock anymore, unless you're speculating on the puts and using the puts as a speculative device because you think the price is going to go down. So a lot of times when I get out of a position, what I do is I just simply go in, I sell my stock, I sell my puts, I take all the money and I put it somewhere else. And remember, capital isn't supposed to be spent and deployed or wasted. It's supposed to be redeployed. So I might say, let me take my money out of this position and put it in that position. So right now, in fact, this week, because I had a few options that expired in the money, I'm going to do a redeployment of my capital. I'm going to take all that money I made and I'm going to put it somewhere else and pick my money makers. And I'm literally trading with the same stuff that I share with you guys every week. And that's where I end up making that move. Okay. So by the way, I want to remind you, if you want to get I also do profit alerts. These are totally free. If you'd like to get Dr. Boyce profit alerts delivered to your text message, just text the word stock to 31996. You can text stock to 31996. And which options play is my favorite? My favorite options play is I like selling the call options, and I like the vertical spreads. I think the vertical spreads are fun. The straddles and strangles are like the butterflies are not bad and the condors aren't bad. But the challenge with some of the straddle, strangles, butterflies, and condors, which are basically positioned based on either the stock staying in a certain range or going outside of a certain range. So you're kind of playing both ends of the stick. You're kind of doing what I consider to be like a Don King of investing, where Don King was a boxing promoter and he would represent both fighters. So no matter which fighter won, he would always win. I thought that was a great strategy, but the problem is that's also an expensive strategy. And so sometimes people will say, oh, yeah, I'm going to get me a straddle or a strangle or whatever, and I'll make money either way. Well, yeah, kind of, but you're going to put up so much money that stock is really going to have to move for you to really make your money. So a lot of times, I try to go with things that are generally positionally correct. For example, the stock market generally goes up. It's really risky to bet that the market's going to go down. And if you do, you better cover up your risk because sometimes that market will go up, and it will absolutely kill you and drag you into the ground financially. So just be really careful when you start making some of these riskier plays. All right. So I like to sell options because I just like to get my income and take my money and, do other stuff with it. That's, or redeploy it into something else. I like to see stocks as an income generating mechanism. And that's actually something I've taught to my kids. So you may want to show your kids this. I know James Wilson, who is in the Prime program, is actually teaching this to his whole entire church, which I think is a great idea. And in fact, if you have a church or an investment club and you want me to come in and work with you, I did that this week. A group in Seattle flew me out. I came out there and I spent 4 hours training them. They wanted to get trained on the 10 Commandments of Black Economic Power, but I can also do the same thing with stock options or stock markets. So if you ever want to do that, just email manager@boycewatkins.com. You can email manager@boycewatkins.com. All right, let's see here. Antoinette says, I don't understand what happened with GameStop and how I'm supposed to benefit from the negative news. I'm trying to go through the content, but it's a lot. Yeah, well, I try to give you more content than you need, Antoinette, to make sure that we over deliver. However, if it feels like a lot, then start with the very basics. Go through maybe like the stock options masterclass. And if anybody wants to see what's in there, just go to stockoptionsmasterclass.com. I believe that URL works. Let me double check so I don't tell you a fib. Yeah, if you go to stockoptionsmasterclass.com, That's where I have a stock options training camp. All the Prime members get free access to the stock options training camp. And it's a great place to begin if you're just sort of getting started and you're not sure what's going on. And if you're really not sure, don't forget we do Stock Market Tuesdays where you guys can send me questions. And every Tuesday I come in at 11 a.m. and I answer every single question you send me. I look up the stocks you want me to look up. I'm there for you. I can teach you. I can show you everything. My whole doctoral study was on the stock market. All the years I was at Syracuse University doing research, all I did was research the stock market. So I know the market pretty well, and I know I can help you, and I can teach it to a 4-year-old. Let's see here. When James Keller says, when I roll up a covered call, do you get another premium? Well, you do. Remember, rolling up and rolling down, all that pretty much means is renegotiating the deal. So in order to renegotiate a deal, meaning you're going to change your current position and switch to a different position. Whenever you renegotiate a deal, you have to get out of the old deal. It's like, think about it like marriage, right? Before I marry another person, I got to divorce the person I'm married to. Y'all follow what I'm saying? Okay. So I can't say, I married this lady and then just run and marry another lady, because then I'd be breaking the law. So basically with investing, if you bought something, you got to sell something in order to be able to buy something else or get into a different position in terms of stock options. So effectively, when you roll up, what you're basically doing is you're kind of saying, okay, I want this price has gone way up. I want to keep ownership of the stock. I don't want the tax implications. So I'm going to do a roll up, which means I'm going to pick a new strike price and a new expiration date. And then I'm going to let the chips fall where they may. So I'm going to buy back the old option and resell a new one. Now, here's the thing. What determines if you get a premium or if you end up paying money is basically simple. Did the new option you sold outweigh financially the option that you bought? The thing that I had to pay for, the money that went out of my pocket, was it higher or lower than the money that comes into my pocket? If the money that comes in is higher than the money that goes out, then I make money. So I could do that by maybe picking longer expiration dates. If I really, really need cash and I need to be a credit, then I can go ahead and get a longer expiration date, sell more time. Remember, time is money. You buy time and you sell time. So when you sell the option and you stretch out the expiration date, you're selling time to someone else. Someone else has to buy that time from you. So when you get that extra money coming in, that can allow you to balance against the money that you're giving up when you're buying the other option back. But if I don't want to sell time, then I may have to put more money out. So that determines whether or not you get a credit or a debit, but you are going to receive the money from what you sell and you're going to pay money for what you buy. Pacola Brown says, Dr. Boyce, first I would like to thank you for all that you do for our people. Thank you, Pacola. However, let's see, question, if the stock market crashes, do I lose all my shares? Like I have $0, and if so, the market goes back up, my shares will go back up, so I'll get all my money back. Yeah, Pacola says she's forever a student. Well, I love you too, Pacola. I've been seeing you in here for years, and I appreciate you very, very much. And I love you. I love you too. No, if the market crashes, you don't lose all your money. And let me just say this about a market crash. I know a lot of you have relatives who know nothing about stocks and investing. That's why you can't listen to people that don't have any money. If you want to learn money, that's the first rule, is talk to people that actually have it, not people who don't. I hate being mean like that, but it's really true. A lot of people get bad investing advice from people that don't know anything about investing, and then it keeps them from investing. And that's just, when I'm getting advice on my marriage, I don't talk to people who can't keep a marriage together. I don't talk to people who will never want to get married. I talk to people like like Dr. Claude Anderson, who's been married 40 or 50 years, Dr. George C. Frazier, a friend of mine who's been married for 40 or 50 years, my father, who's been married for 50 years. That's who I go to for marital advice. I hope that makes sense. Okay. So the same thing is true when it comes to getting investing advice and investing information. A market crash is not the end of the world. A stock market crash does not mean somebody died. A stock market crash does not mean, oh my Lord Jesus, everything's just going straight to hell. A stock market crash is basically what they call a correction. That's just when the market just needs to cool off, dip a little bit. And the thing about it that you need to understand, never forget this. There's never been a time with the market crash where it did not recover. So when you see a crash, that is an opportunity. A boom is an opportunity. The stock market booms, that's when you get rewarded for your sacrifices from the past. The stock market crashes are where you get rewarded for your investments for the future. You guys get what I'm saying? That literally a stock market crash is when you can make money for the future. A stock market boom is when you're getting rewarded for what you did in the past. So here's the thing. If you're talking about stock market crashes, I think people just make it into more than what it is. I think there are people who talk about stock market crashes like they're these terrible things, and it's the end of the world. The dollar is going to drop to nothing. The value of their investment is going to drop to nothing. Anytime I ever hear about somebody that invests in the stock market who tells me they lost all their money, I instantly know that they invested the wrong way. Instantly. It's like if somebody says, I ate at McDonald's and I died after eating at McDonald's. That doesn't mean that everybody who eats at McDonald's dies. The next question you're gonna ask is, what did you eat? And which McDonald's did you eat at? What did they put in your food? Right? So the same thing is true with investing. When somebody says, I lost all my money, I invested, I lost everything, that means they probably didn't invest the right way. That means maybe they bought some shady crypto, and put all their money in some shady crypto. Maybe their investment advisor put all their money into their cousin's liquor store or their uncle's bowling alley, and the bowling alley flopped. Maybe they took the money and put it into one stock, and that stock went belly up, and they lost everything. People that say that they lost everything, and this is what's important: people that said that they lost everything are typically, I'm not saying that they're lying, I'm saying that they typically did not invest in the appropriate way. So effectively, here's the rule. Here's what I want you to walk away with. Here's what I'm going to tell you that's going to make it easy for you to explain to the idiots in your life that they need to leave you alone and stop bothering you when you're trying to build for the future. Anybody who invests and simply spreads their money out among, say, S&P 500 stocks, and does that with at least, say, 15 to 20 stocks, even if you randomly pick those stocks, is never going to lose all their money. They're just not. Well, why can I say that with certainty? Because there's never been a point in American history where a portfolio built that way has gone down and not recovered. In fact, when it goes down, that's wonderful. You should be so happy, because all that's required for you to make money in that situation is for you to commit to this concept called delayed gratification. If you can delay gratification, sacrifice today so you can have more tomorrow, then it's easy money. It's money falling out of the sky. It's money growing on trees. This is how rich people get rich. Just trust me. I know these things. Okay. So diversify your investments. Don't go invest in anything that's crazy. Avoid the two emotions we talk about in Prime class that you should always avoid as an investor, which are fear and greed. Fear and greed will destroy you. Those are the two emotions that will cause you to make bad decisions. At that point, you're going to be fine. Okay. In fact, if you go to drboyceprime.com, number one, you can find out everything that's in your program. We're going to be meeting for class this week. So feel free to go to drboyceprime.com to get more information. And I also, just as another free gift from the Black Business School, if you text the word stock to 31996, then I will send you profit alerts. I'll send you long-term investments each week that you can look at. I'll send you the $5 a day investing plan that can turn any poverty-stricken family into a wealthy family in less than 20 years, actually. And then also I'll send you the training, how to make money without working. I'll send you a list of AI stocks that I love. I'll send you a list of Chinese stocks that I like. We'll sort of give you everything. I'll let you guys know what I'm doing and what I'm into. And because remember, when you're talking about generating income from selling the options, which is what we focus on in the Prime program, Prime stands for passive recurring income machine. That is income you earn that is passive, which means you don't have to work for it. And it allows you to take your investments and make money from your investments without having to sell your stock, right? That's what Prime does. But you also need a long-term portfolio, or a medium term at least, that's going to give you that long-term capital gains that's going to benefit you when you go into retirement, or if you decide to make another investment, or you decide to pass it on to your children. This is where wealth comes from. The wealth is very easy to acquire if you know what you're doing. And I want to help you guys with that. Okay. All right. So I'll see you guys in class, and I hope you have a good day, and I'll talk to you later. Take care now. Bye-bye.